Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Cannabis startups spark joy for investors. 1 year ago, Crunchbase News published a quarterly report on the cannabis industry in the wake of recreational legalization in California, one of the largest markets for adult use in the world. Investors and companies were excited about the future of the industry, yet remain wary of the regulatory challenges that remain for both consumers and entrepreneurs. Now, 1 year and a key resignation later, the industry continues to light up. According to Crunchbase data, funding for cannabis companies more than doubled from 2017 to 2018, with more than $1.3 billion directed towards startups and other private companies in the industry last year. Though dollar volume in Q1 2019 was slightly lower than the immediately preceding quarter, it was still double that of the year-ago quarter. However, private market reporting lag may account for the quarter-over-quarter decline. Taking a closer look at the largest rounds for cannabis startups since 2017, many of the top 15 rounds were directed towards companies that touched the plant. That includes a $90 million round for grassroots cannabis in March of 2019, a $75 million round for cannabis brand Caliva, and a $125 million round for cannabis producer and distributor Flowcanna. According to managing partner at Casa Verde Capital, it's not surprising that cannabis startups touching on cultivation, manufacturing, distribution, and retail are announcing large funding rounds. These are really capital-intensive assets that need a lot of dollars. Interstate commerce regulatory requirements also add to the cost of supporting cannabis startups. Cannabis companies that want to distribute to multiple states must have centers in different states, which often means acquiring or starting subsidiaries. In short, regulations are hard and expensive to navigate, but those willing to do so now may see a large pay for their efforts. There's also room for institutional investors who have largely avoided investing in the production of cannabis for legal reasons to invest in cannabis-adjacent startups. Cannabis job recruiting platform Vanx had raised $12.5 million as a good example. These ancillary companies represent a lot of opportunity in terms of scale with less legal risk than other angles, according to a principal at Lear Hipua, which has invested in companies that are developing CBD and hemp solutions. And with more cultivation companies going public in Canada, it's likely that this interest will grow as private valuations do too. Why is Wall Street so skeptical of cannabis stocks? There are no shortage of reasons behind Wall Street's cautiously optimistic approach to cannabis stocks. To begin with, there's supply chain issues galore in Canada. These supply concerns have manifested in three separate ways. First, there's an insane backlog of more than 800 applicants that Health Canada is contending with, most of which are cultivation licenses. Many of those applications can take from months to more than a year to review and approve. This is leaving potential growers twiddling their thumbs on the sidelines. Second, there are packaging constraints that are causing a major headache. Health Canada laid out specific guidelines on what growers and retailers need to do in order to get product on dispensary shelves. Packaging needs to be child and tamper resistant as well as contain certain warnings and labels. Right now, there just isn't enough compliant packaging in Canada. Third and finally, it's going to take a while before growers are operating anywhere near peak capacity. Cannabis stock income statements haven't given Wall Street much confidence either. Although analysts and investors have had something of a heads up on the industry's supply chain issues, they've still been blindsided by some stunningly large losses or less than stellar returns. Last of all, the constant issue of new shares to raise cash by most pot stocks has probably given Wall Street reason to contain its optimism. For example, Aurora has issued 1 billion shares of common stock over the last 4.5 years and is going to have a very hard time generating a significant per share profit or earnings per share EPS as a result of its share-based dilution. As much as investors would like to see Wall Street becoming increasingly bullish on cannabis, pot stocks haven't given analysts any reason to change their tune. A group of nuns are raking in 850,000 pounds a year, turning a covenant into an international cannabis operation. Today, the business is flourishing and the community of nuns have high hopes of expanding their medical marijuana empire. And with that, we're going to wrap this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.